I'm John Batchelor. I'm joined by my colleague, Thaddeus McCotter. WJR, the great voice of the Great Lakes, who's here with me in studio, is driven into New York. Most people in New York leave when it's this time of year, but Thaddeus drives to New York. Thaddeus, a very good evening to you.
Good evening to you, John.
Thaddeus and I can happily say that neither of us have money invested in the Shanghai or Shenzhen stock markets. Is that correct, Thaddeus?
That is correct,
right,
Mr. Batchelor.
So we have no problems reporting on a bubble collapsing, or not. Thanks to Gordon Chang of Forbes.com. He joins us now. This isn't just a stock market story. This has to do with the credibility, the approval rating, the fears of the Communist Party in Beijing that controls these markets and controls the Chinese economy tightly. And the events of these last months, the aggression by the Chinese military, are connected to these markets. You can bet, you can assume, actually you don't have to bet, just know that all of the major figures involved in the Chinese Communist Party and the Chinese military have money, have reason to worry about the collapse of the Shanghai and Shenzhen market because they ride a wave up, and now the wave is crested. Gordon, a very good evening to you. The wave crested last week, just as we were having fun talking about how do you invest in a bubble. What happened, Gordon, and why?
Well, on Friday, the Shanghai Composite, which is the widely followed index, fell 6.3%. It was down about 13.3% for the week. And the question is whether this is a correction or is this the start of a bear market. Now, because this is a do-or-die moment for the Chinese government, they are going to do everything they possibly can to keep this market from falling apart. Now, it has been fueled largely by margin debt, which has increased by about 5 times in 2014 over 2013. And with any market fueled by debt, it's always extremely dangerous. And that's why right now the Chinese government has to be panicking, because there was panic selling on Friday. Now, today, Monday, the markets recovered a little bit, which is what I predicted, largely because I think there was government support. But going forward, the government can't support this market forever, and that's going to be a problem for people who have put their money into the markets recently.
Before Thaddeus asks, definition, margin debt, what does that mean, Gordon?
That means basically borrowing from securities houses. So if you say, look, I want to buy a stock, but I don't have money for it, the securities house will will give you money, basically. You have to put up maybe 10% of the amount you borrow, and that's margin. But people have also been borrowing from their friends and from the banks informally. So it's not just the margin debt that is of concern, it's the total debt that has been incurred to really participate in what has got to be a bubble.
Gordon, it's Thaddeus. You've talked about in the past, and John has touched on it tonight, when times are rough economically, the regime tends to go to nationalism to try to boost up its popularity. What is the impact of such nationalistic policies on the very economy they're trying to prop up?
Well, the impact is really a negative one, because every time China lashes out against its neighbors then start to have second thoughts about committing money to China because the place looks risky. This has been especially true with Japanese companies that have really looked at China for the last couple of years as a sort of a dangerous place for them to be. And so although they've made some investments in China recently, a lot of their money has gone to India and Southeast Asia because the Japanese know that every time that there is a problem in China, the Japanese are going to be used as an excuse, and there are going to be riots against Japanese facilities, as there have been so many times in the last 5 or 6 years.
Looking at a chart of this market, it's been rising since late last year, and rising pretty much like a rocket. And you say correction. Correction could be 10%, bear market would be 20%. If it retreats to where it started from, Gordon, that's more like 30 to 40% retreat.
Oh, it's more than that, John. It's like 152% or so from last July. And if you measure the bull market as Bloomberg does, which is 929 days, then it's going to be even bigger than that. So this is a major, major change if it goes back to where it started.
And I want to make the connection then. There's no fundamental to suggest that this market has a reason to keep rising. The Chinese numbers have been deteriorating for a year. That continues, correct?
Correct. I mean, the economy is growing, if it's growing at all, at 1 or 2%. May not even be doing that. Chinese stocks are now trading at 84 times forward earnings, which is really very rich when you think about the U.S. is somewhere between 25 and 30 or so. So essentially you have a market which is untethered to the fundamentals. And the Chinese government wants it that way. The Chinese government has been taking credit for actually engineering this bull market, which means that when it comes back down, there's no way they can blame anybody else, or at least they can't blame anybody else credibly.
Well, I just wanted to establish this question. This is the madness of crowds. That's what we're witnessing here. This is a bubble like the South Sea bubble.
Absolutely. And the only way you can make money, John, in this bubble is if you are awake every single moment that the market is trading and that you are prepared to move as fast as anybody else. Because if you sleep, if you're down for 5 minutes, you may not be able to find a buyer on the other side if you want to get out.
Gordon, what are the next moves of the Chinese regime to try to prop up this bubble?
I think they're going to have state enterprises go into the market and buy their own shares, or we're going to see state entities go out and buy shares of companies to keep the market going. They're certainly going to release more liquidity into the Chinese economy. The central bank has been doing that a number of times, and I think they're going to continue that because they know the money will find its way into the market, because it's certainly not going to go into any sort of productive capacity, because there's fundamental lack of demand in China right now. So all the money that is released into the economy by the central bank will either go into property or go into stocks, go into some sort of bubble territory.
A moment, Gordon. We will speak of this at length on Wednesday when you join me for the evening. The vote rejecting the imposed solution in Hong Kong, the people in the legislature rejected Beijing's dictation. What does that mean right now?
This is a real debacle, because this legislation with the 2017 election procedures was never going to pass because the pan-Democrats had enough to prevent a two-thirds majority. But what happened was a debacle because the pro-Beijing legislators tried to break a quorum, and they failed to break a quorum. So there was only 8 people who voted for Beijing's proposal. 28 voted against it in a 70-person legislature. Now Beijing cannot blame the pan-Democrats for blocking it because their own people didn't vote for it. This is incredible, John. This is completely unanticipated that the Beijing legislators would have just totally screwed this up.
What we have then is a crisis in Hong Kong, or more of the same, just this drift?
It's going to be more drift because the pan-Democrats don't have the votes to be able to push forward legislation on their own, which would make the procedures for the 2017 election fairer. But on the other hand, they probably are going to do very well in the next set of elections, which means that they will have their critical blocking minority. That'll continue in all probability, which means then that Beijing is going to be stymied in Hong Kong. That means Beijing very well may try some rougher tactics because they can't get what they want at the ballot box. This is not going to be a good story for Hong Kong, but nonetheless, it shows that Hong Kong people are fighting back, and thank God that Beijing's pro-Beijing legislators, they really screwed this up big time.
Gordon Chang, Forbes.com contributor. There is a bubble bloodbath potential in Hong Kong, in Shanghai and Shenzhen markets. Hong Kong, there's drift and controversy and surprise. Gordon Chang, Thaddeus McCotter, I'm John Batchelor.